Hi, this is Drew Hinrich, and you're watching the Best Practices Show.
Hey guys, thanks for watching the Best Practice Show, where we take a look at the best business practices from the best dental practices all over the world. And if you're growing a private practice, you do not want to miss the show today, because this is going to be an incredible way to change the way you look at profit in your practice with our good friend, Drew Hinrich from, you're going to see he's just an incredible influencer, authority on this particular subject, a man that I reach out to all the time. And we're going to ask him some pretty tough questions on cash flow and how we maintain a profitable private practice in dentistry. So grab a pen and hit the share button. You're going to love this. Now, a couple show notes. We are shooting this live on Facebook. So if you're watching this and you have a few questions, continue to add them to the feed, or even add some tough questions, because I've got a couple tough ones I want to ask Drew today, and I will dish them to Drew while he's on, and that way we can get the answers straight from the expert while he's here. Or you can add the questions later on in the feed, and you'll see Drew will do his best to get back to you, because we want you to get the most out of this when you're watching these. Also, don't be afraid to send these to your accountant or your bookkeeper, because this is one of those concepts that if you get it, your accountant's going to go, no, 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 no. And you go, yes, 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 yes. Just watch this. And they'll go, oh, I get it. So critical piece. Now, again, love all the suggestions that are coming in. Keep sending them to us. I've got some incredible surprises for you in the next couple of weeks that you're absolutely going to love. Right now, up over 39,000 followers on Facebook, and over 150,000 of you visiting on iTunes and climbing. So I don't have anything to say other than thank you. Now, my guest today, Drew, you and I have known each other for years. You're always the man that I go to, and I'm like, okay, how do I think about this? How do we put this in place? You actually work with quite a few of our clients. You're an incredible resource for our community on the accounting, financial side of things. But if somebody's watching this today and they don't know who you are, tell us a little bit about who Drew is, what you do, and your story. How'd you get involved in this?
Yeah, great question. Thanks so much for having me today. So, the short story is we got involved with running, CPA services and financial services for dentists, because my dad's a dentist and ultimately saw a huge gap in the market, back in 2010, and just bad advice, number one, lack of advice, number two, and just needing to help and wanting to help and make some kind of a difference. And so we've built our organization around helping dentists exclusively across the country solve those, financial issues that they run into every day.
Yeah. And so today we're going to be talking about the Profit First model, which you are the only person that's authorized. You're actually the selected writer for the Profit First for dentists, which is coming out. We're going to talk about that soon. But this book, guys, if you haven't read this book, you got to get this book. It's based on this. Now, it's nothing new. But it's an incredible mind shift between what used to be and what needs to be. And it's one of the most important things that anybody can do in any business. Now, after we present this, I'm just telling you, if you're watching this, you're going to say there's no other way to run a business. You couldn't even argue that there's a better way to run a business after you've watched this. So, but before we get into the how, I want to talk about the why. So, Drew, why is Profit First such an important topic in today's climate for dentists?
Well, when you think about what most dentists are used to seeing and what most conversations with a CPA would be, and even conversations that I would have had, many years ago with dentists, was ultimately it's like, hey, collect all your dollars, pay all your expenses, and now at the end of the day, what do I have left? Like, how much money did I make this year? And it becomes a factor of, the mathematical equation of revenues minus expenses equals profit. And so, but the question that we always get is, well, what do you mean I have that much profit? What do you mean I have that much taxable income? Like, where did the money go? I just don't understand where the money went. And so Profit First is a great way to be intentional with your dollars and to make sure that you know exactly where things are going and exactly why. So it puts you in control, and it's less control. Money has less control over you.
Absolutely. Now, if you have a pen, do this. Write this down because we're going to show you the equation and then we're going to break it down underneath how it all works. But profit first. So write the first equation down. So Drew, the old equation was what?
Revenue minus expenses equals profit.
Okay, so that's the old way to do it. The new way that I want everybody watching this to change it today is this. Here's the new formula. Give it to them.
It is revenue minus profit equals expenses. And that's the crazy thing when you have mathematics. It's the exact same equation, right? You're just moving things around.
Right. Now explain the psychology behind that and put the human behavioral component in there too, that we always talk about. So describe, after you subtract profit, how it equals expenses. How does that work in a dental practice?
So ultimately, anytime it's Parkinson's law would say that, anytime that you have a infinite amount or you have a certain amount of resources available, whatever you're doing is going to expand to those amount of resources. And so, for instance, like time, like whenever you have a certain amount to prepare for a big case, like suddenly the day before, right, you're working up all your final models and getting all your presentation slides together and the financing stuff could have happened a week ago, but we're going to do it the night before, or whatever, the day before, whatever that may be, the weekend before. Et cetera. And so that's a prime example. But when you start changing behavior, like 401k plans, for instance, is a great example, and you're putting those dollars first, you're being intentional, suddenly lots of little itty bitty things happen over time in order to get you to a much better result.
Yeah, absolutely. Parkinson's law is an awesome example we use all the time because even if you're a dental student watching this and we give you 3 hours to do an amalgam, guess how long you're going to take?
2 hours and 59 minutes.
You'll take 2 hours and 59 minutes. Same thing applies in a business. And I don't know who said this, but somebody said this. Your business it will eat everything you give it. So if you put cash into account, trust me, your business will eat all of it unless you do the contrary. And so what we're going to propose here is that you feed it less. We're going to take something and sequester it and then feed what's left later on. So, yeah. Now, a couple things that you're thinking, okay, well, Kirk, this book is so good. And when Drew's comes out, you got to read it because it's going to be specific to a dental practice. Now, this book is not something new. This has been around forever. Some of you have read this book. This is a required read, which is The Richest Man in Babylon. It's the same principle, but it's been around thousands of years, and it's basically this whole book. First of all, it's fantastic, is you save 10% and you live on 90%. Now we're going to walk through the nuances of how this works in a dental practice, but Drew, you're basically going to set up a couple of accounts. Walk us through the accounts, and before you do the accounts, you want dentists doing this on Fridays, right? Or once a week, let's say.
So I recommend my clients do it either on Fridays once a week or maybe every other week whenever they run their payroll, because they're already in doing their administrative stuff anyway, and so that way it just doesn't take any more time out of their day. It's not hard. It's not difficult. It's super, super, super easy. But the actual mechanics is you start with everybody has one checking account now, typically, at least one, right? And that's usually where all your money's deposited to. It's where all your checks are written out of. It's where your payroll comes out of. It's where your loan payments, all your EFTs and ACHs and everything else, et cetera, et cetera, et cetera, come in and out of. And so then they look at that account and you say, wow, I've got, $50,000 in that account, or I've got $100,000 in that account. Like, life is good. And what you don't recognize is that, well, certain amount of it is actually because I need to pay taxes, right? So I need to have that tax money set aside. Certain amount of it is, well, I should have been paying myself this, but I was paying myself that, whatever those numbers are. Certain amount of it is I need to, make sure that I've got my operating expenses covered. And then you get down and you break those out at the end of the day. You might say, wow, I actually only really have this amount, which is much smaller than this amount that you thought you had before. And so what Profit First, says and what we do with it is ultimately we break all those separate things into separate distinct bank accounts. And so when you have separate distinct bank accounts, then you can look and say you open your online banking at the end of every day if you want to. I have some clients that say we do it multiple times a day, and that's okay. Nothing wrong with that. But at least, most people would look at least every day or every couple of days. You open your online banking and you see exactly how much you can pay yourself as an owner, exactly how much you have set aside for taxes, most importantly, exactly what you have in your profit account for your quarterly profit distribution, and then what's left over at the end of the day in order to make sure that we pay bills.
Yeah. Now, in the book, they recommend doing it at separate banks in some cases for some accounts. Do you agree with that, or does it matter?
So I do agree with that. If you have a hard time keeping yourself out of trouble. And so if you, self-discipline, it's one of those things that's a case by case basis, really. And so if, we have some clients that prefer to have separate bank accounts because it truly takes that need for self-discipline out. And everybody gets up every day, right? And you have to make a certain amount of decisions anyways, and you use a certain amount of energy making decisions. And so if you take that completely out of the equation, that's one less thing for you to have to decide on and have to struggle with or have to fight temptation with every day. So everybody has a different opinion as to whether they do it or not. I personally do, but that's just to make my life easier.
Yeah. Now, if you're a dentist watching this and you're a young one, the cool part about this is that you can always budget 100%. It never changes. So if you create this, as you grow, your income will grow and you'll save more over time. Now, if you're a mature dentist, you know this. It's so much easier to save when you have this much than it is when you collect 100,000. You're like, oh my gosh.
Yeah.
So you want to start the discipline as early as you can. You can even start this late, but we're going to go through the accounts and show how this works. So, so the first one, Drew, is you're going to create what's called your profit account. This is the first deposit you make every Friday. So describe the profit account.
Absolutely. So the profit account is just that. We're taking our profit right off the top and we're taking it first. And so out of 100% of money that comes into our income account, theoretically speaking, we should be taking 10% of that 100%, 10% and depositing it into or transferring it into our profit account every Friday, for instance. And what that money is used for is every single quarter end, you look and you say, okay, I've got $20,000 in my profit account, or I've got $50,000 in my profit account, or whatever that number is. It doesn't matter. And I then take half of that money and use it to pay debt, and I leave most of that money in the profit account in order to continue building my rainy day fund or my emergency fund, and then I celebrate with a little bit of it. And that's again personal preference. If you want to celebrate with most of it, then I guess that's your choice. But you should leave most of it in to build that rainy day fund and celebrate with a little bit until you're debt free, because debt is terrible. You shouldn't have debt. That should be your goal.
Yeah, and I get this question all the time from dentists. I've been doing this for more than 20 years. Where does my debt show up on my overhead, and then how much debt should I have as a percentage of cash flow? And I love your answer. How much debt should a dentist have?
Well, you should strive for zero over time. I mean, because it's just, unfortunately, it is a boat anchor that'll weigh your profitability down. It'll weigh the ability to save and put dollars away into retirement down. But, the reality is, to start with, you have to have some, whether that's new equipment, whether that's a new office, whether that's a practice acquisition, in some way, shape, or form, you're going to have to start with some debt. That's just the way dentistry is. It's a capital intensive business. And so we get started with debt, and we pay those debt out of our operating expense account. And we pay that, because it's considered an operating expense, it's a necessary use of cash to operate the business and have it move forward. A CPA would say, well, that's not in your operating expenses. And that's true for the standpoint of, you look in QuickBooks, it's not going to show up on your P&L statement. That's what drives most dentists insane, is they say, I have no idea where my cash goes. I look in QuickBooks and I'm a dentist, not an accountant. I don't know how to understand, all of these different reports in order to understand where my cash went to. And that's where Profit First is really designed to help, break it down in the most simple way possible.
All right, now stay tuned, because if you're watching this again, I want you to take notes. And if you're keeping score at home, we're going to walk you through this, because I want to give you some examples. So let's say you're the average dentist that's been through a lot of continuing education. You're collecting $100,000 a month. For simple math, let's just use $100,000 a month, and let's just say 4 weeks out of a month. So every week you're going to collect about $25,000. Are we on the same page as that?
Yeah.
And so 10% off the top is going to be $2,500 every Friday, is just going to go into the profit account. Now, I want you to think about this. The long-term extrapolation of that is that if you're saving 10% off the top, at the end of the year, you're going to have $120,000 sitting in your profit account for what Drew just said. Now, you're going to use that quarterly for the formula that you just gave him. But at the top of it, you grow your practice to 2 million or 3 million. Now that is growing without you doing anything. And let me just say this, one more thing. People think their problems go away when they make more money.
Oh, no.
No, you know that whole saying, more money, more problems? Oh, you better believe it, because you are now jumping tax brackets. And we have dentists all the time. We coach them and they go, yeah, working with that was awesome, but I jumped 2 tax brackets, man, and I am paying the government a lot of money. And I'm like, congratulations. That's your reward for jumping tax brackets like that. So you want to make sure that you got a system in place that automates that. So 10% 10%. Now, some of you might be watching going, Kirk, I can't take 10% off my overhead, 72%. Drew, would you agree? Maybe start with 1%.
Yeah, absolutely.
I don't care if it's $100.
Start somewhere.
Start.
Yeah.
Everybody can say $100. Yes. Okay. So would you tell a dentist who's watched this who's like, I 75% overhead, I can't even pay myself. What would you do? Would you start with 1% or $100? It doesn't matter.
Exactly what we do. And so I always recommend, so we're starting a thing to help dentists buy dental practices and answer their questions and so on and so forth. It's called buyyourdentalpractice.com is the website that we're going to put up in the Facebook group and everything like that. And our goal is to have every single new dentist implement this. And the reason why is because, one, you start young, right? And you build great habits. It's the slight edge. You build incrementally better habits and build great habits. And number two is just start with 1%. Start somewhere. Doesn't matter where. Doesn't matter where. And the same thing with financial planning. It's like if you can't do a 401k, at least do an IRA. Start somewhere. You can't take that time back. You got to start somewhere.
Now, I'm really big on the 13-week thing because if you break 13 weeks down, it's the equivalent of one quarter. You've got 4 13-week periods in a year. I would say this as a dentist, we're going to make our goal 1% for the quarter. Then we're going to move to the next quarter and we're going to go to 2%. Then we're going to go to 3%. Then we're going to go 4%. In an amount of no time, you'll be up to 10% and you'll be like, this is crazy how well this works. Correct. So shave the 10% off the top. It'll also create a little mindset that you'll want to work hard because these accounts are going to be funded by how hard you work and net a result. So that's the first account. Let's go to the second account. So it's profit is going to be first. What's the second account?
Owner's pay. Owner's pay is arguably the second most important because you dentist, right? Or, you, Kirk, right? You're probably your number one most, important employee, right? But
I was dentist. We make some.
Maybe not you.
We'd make some real money around here if they fired me.
That's right. I can believe that. Yeah, I can appreciate
that. Dental practice too. You know what I mean?
That's true. But dentists, right? Arguably, the business owner is usually the number one most important employee. They're usually also the number one most underpaid employee, because they get their paycheck last. And so you have to make sure that you're taking care of yourself and that you're paying yourself wages, if you will, a percentage of your collections, a percentage of business collections. That is where you should be in the market to make sure you're treating yourself as an employee and making sure that you're taken care of too.
Absolutely. Now, keep in mind, here's what we're doing. When you're building profit first, you're not only saving money, which at the end of the day means a lot, you're also creating a very valuable business because at the end of the day, when you transition, the only practices that are really worth purchasing are the ones that have a high patient number and a high yield. We tell young dentists, it's hard to buy a practice that isn't profitable. I mean, you can make it profitable, but that requires a lot of extra energy.
Yeah.
Absolutely. If you're a mature dentist, you want to show a young dentist, hey, look, there's a high return in this practice.
Absolutely.
Because I started years ago with this thing called Profit First, and you probably should do the same.
That's right.
Something to think about. Now let's go into owner's pay. Let's just add a percentage to this. So let's say again, I'm collecting 1.2 million in a year. And $25,000 a week. What would I take as a percentage every week? That would be the second paycheck of that.
Yeah, great question. So usually we say what's called a target allocation percentage or a TAP percentage would be somewhere between 15 and 20% most likely, depending on if you're a general practice or if you're a specialty. I mean, that's where you get into some of these nuances. But for ease of math, let's say 15.
Okay, so let's say 15%. Or because I'm not good at math, let's go to 20%. Okay, so 20% is going to be twice what you saved in profit of $2,500. So that's going to be $5,000 a week that you're going to pay yourself. Now, don't throw the baby out with the bathwater if you're a dentist watching this going, I couldn't survive on $5,000 a week. My lifestyle needs a lot more than that. And then now you're just going to turn off the podcast. Okay, don't do that. Because you got to start somewhere again. So maybe your percentage is 1% in profit, and now it's 30% or even 40% in owner's pay. And you know what we're going to do now? We're going to work every quarter to get those percentages healthier and healthier and healthier. And trust me, you're going to make way more money when you have a plan than when you don't have a plan. Right. Would you agree?
Absolutely. I totally agree. 100%. 100% correct.
So 20% in there. Now, I got to ask you this question because these are not associate. This money is purely for the owner. What if it's two owners?
Then it's purely for the owners, right? You've got two dentists that should be making, two dentists producing should be making more, more money, and that's where every single practice is different, and so we change everything depending on whatever practice it may be.
Okay, now again, is this a business account or is it my own personal account? That's the question I get too.
And that in and of itself is kind of a personal decision. And so I have some clients that say, you know what, instead of transferring it to a business account, I bank at Bank of America, right? My personal and my business banks are there. I have to move money anyway, so I might as well move it over to my personal account. And that's
Right.
okay. There's nothing wrong with that.
There's nothing wrong with that. And if you've been in business more than a year, you already know anything that comes out of a business account and into a personal account has a tax responsibility attached to it, which is what we're going to get into next. So take us through the next layer of it, which is what's the third account?
Taxes. So that's what we have to make sure we're planning for taxes.
Okay, why is this so important? Because are taxes a big deal? Are they a little deal? What are they?
Well, I mean, if you ask the IRS, I'd say that the IRS would tell you they're a really big deal, right? They should be paid first. And that, in some respects, that's the last people that you want on your tail for underpayment or non-payment. And so I would say that they're a pretty big deal.
Right. Now, again, if you're keeping score at home, we're going to follow along. So you're going to do 10% here, 20% here. Give me the percentage allocation for taxes if I'm pulling that kind of money, Drew.
Yeah, I'd say 15% is what you'd want to look at there.
Okay, tell us why.
And the reason why is because you want to be able to cover not only your income tax generated by your salary, your owner's pay, but also by your profit distribution, and then also want to make sure if you're an S corporation and have to have a reasonable payroll, that's taken into account your own personal payroll taxes for the employer and employee portion as well. So it's all taxes generated by the business as it relates to you as an owner and income tax impact for you as an owner.
Right. And let's just go right there, too, because, guys, you got to, and we've all been there as far as when you make more money, you got to pay what? You got to pay more taxes. Right. And there's only so much you can skin this cat. And then you don't want to mess with the RA. And now, Drew, and you and I were talking about this. And over 20 years of doing this, I always find a dentist at a seminar who comes up to me and they're caught in the snowball. Now, you know what the snowball is? The snowball is you didn't pay taxes on last year's income with last year's revenue. So now you're borrowing this year's revenue to pay last year's taxes, and that's called the snowball. And some dentists get in a big snowball, and now they don't realize they're working so hard to pay last year's taxes, and that is extremely dangerous, right?
Difficult, very much so. Yeah, very much difficult. And that's, you can either continue to weather that storm, right? Carry it on. But ultimately, I at least would think you would want to get caught up. And at some point in time, you want to be level set and paying this year's taxes with this year's dollars. And if you want the best quality of the life and the best stomach lining, the thickest stomach lining possible, that's probably the game plan that you're going to want to get to. But that just means you have to chip away at it, and you have to be more intentional with how much you're saving for tax dollars. And it very well may be that, for the next 4 quarters, a big portion of our debt that we're paying off with our profit distributions is going to be getting ahead in our taxes or getting caught up.
Yeah, and if you're in the snowball, you might have to allocate a higher percentage than 15% because you got to pay taxes with this year's money.
Right.
And you're also going to be paying last year's taxes with this year's money, which is, again, when a dentist is in that. Now, again, here's the other thing. When a dentist is making a lot of money, that is extremely painful because I can tell you already they need that money because they've built a lifestyle on that, and it makes them nuts when they're paid. So if you're in the snowball, you're going to want to be able to allocate a higher percentage and then, again, get those back to a healthy percentage on that.
Right.
Now, Drew, when do you pay taxes, or what are some guidelines as far as how you pull that money and pay taxes? I'm guessing you're just going to do it regularly, quarterly with the dentist. Is that what you suggest?
Yeah, that's what most of our clients find to be easiest. And so most of our clients are what's called an S corporation. And so that's just the most efficient way typically. So if you're a C corporation or a Schedule C dentist that's out there filing, you might consider an S corporation because it's probably a lot more a lot less tax. It's a more tax-friendly way to file your taxes, et cetera. And they require to be on payroll. And so what we do then is every single quarter we work with our clients in order to determine what's their tax liability. And then we pay in that amount. We fund their 401k. We do any of the, their HSA, the other stuff that needs to be done at that point in time, just at the end of every quarter.
Right. Now, what happens if you have money left over in the tax account? I get that question too. Do we just leave it sit for the next quarter, or would you exhaust everything that's in the tax account? I mean, again, probably case-by-case basis, but... Correct.
Yeah, absolutely case-by-case basis. So what we want to make sure is that we have our tax liability covered and paid for, and then ultimately at the end of the end of the day, after everything is all said and done and you're comfortable, all your taxes paid for, more profit.
Okay, here's another question I get. Where does my pension play in a role here? Is that going to fall down at the bottom after I've taken this cash? Is that typically what happens? Or am I going to be allocating percentages in owner's pay and tax pay to go towards that?
Owner's pay and profit percentages is what we use in order to determine, how much we're going to fund in our pension. Ultimately, because it's one thing you'd say, okay, we can build our lifestyle a certain way, and we have to take into account how much we want to save. Just like if you and I or they were out working for another business somewhere and being paid as a W-2 employee, right? The amount that they want to contribute to their 401k is going to come right out of their paycheck, and so it's no different, for you and I or for them as a business owner.
Yeah. So, okay. Now we're going to go to the next account. So obviously after you've had profit established and you put a percentage of that, then you're going to pay owner's pay. Now you're going to allocate taxes. And now at the end of Friday, you're going to have some money left in the account. What do we do with that money that's left in the account?
That's what goes into your operating expense account. And so that would be the 55% is where we're at now, based on the numbers that we've laid out so far. And so that 55% goes into your operating expense account. And that's what's going to be used for payroll, for your facility cost, for your dental supplies, your lab fees, your marketing, your accounting, insurance, all of those things that it takes in order to run your business.
Right. Yeah. Now I'm going to fly the eye of the storm because this conversation happens with dentists. I'm going to the CDA next week. People come up to me and they go, you don't understand my overhead. Like I got to have an overhead target. And Drew, you help me with this. You're not so concerned about what their overhead percentage is. I mean, it's important. Don't get me wrong. We will figure that out. But your overhead doesn't tell me how much you're saving. It only tells me what you're telling the IRS for the most part. So I don't want to lead you with this, but tell me your opinion on overhead if somebody's watching this.
Yeah, so my personal opinion on overhead is it's not the most important thing, right? So looking at the profit, looking at how much we're paying ourselves as a percentage, that's the most important thing. And then when you find that you have issues or you're like, hey, I can't get from 72% down to 60% or 72% down to 70% even, that's where we look and we get into the nitty gritty and we say, okay, well, what is your dental supplies? What is your hygiene specific overhead? What is your front office, your clinical assistant specific overhead, et cetera, et cetera. And that's where those overhead things come into play on a very small scale, on a timeline along the year. And it's not something that we look at every single day and say, oh my gosh, what is my hygiene payroll today? Or what is my hygiene payroll been right now? It's more important to look at the bigger picture at a more global scale.
Yeah, and so I'm going to have Drew back with, and we're going to cover each one of these. But I told him today we're going to do the most important thing first, and then the next show that we do, we're going to go through where your targets for overhead, because I get those too. Like, what should my team compensation should be? I'm like, let's start with the important thing first. So just again, so you keeping score at home. If your overhead's crazy high, you're going to start with profit first and go, look, I can't do this, but I'm going to start 1% here. I'm going to start 30% here. I'm going to start 10% here. And that gives me like 69% of my dollars left to try to get this under control. Now, again, where do loan payments and other things go that come up? People are always like, well, I'm paying for a practice. I got $10,000 a month in loan payments. Where do those go?
Absolutely. We pay those right out of operating expense. So we consider that an operating expense. And so a big part of what we do to help dentists is we help them understand where they've been, where they are now and trying to get to, say, over the next 6 or 8 quarters. And then so therefore they can help that game plan into the future. And that's, we work with them to put together what's called a profitability analysis and a rollout plan. And that's a huge part of that rollout plan is where are we at from our debt? What is our debt payment, and our total operating expense, and then how can we minimize that, including paying off debt and so on and so forth. So it's pretty amazing. And the compounding, what you want to do is create the compounding on the other side, which is compound interest is one of the wonders of the world. It's an amazing thing. And if any of you have been doing dollar cost averaging since the day you got involved in practice, you didn't really care what the stock market did. I mean, you probably paid attention to it. You know its power long term. And so we want to get on that side of the ball and make that happen. I want to add one piece because obviously I love this topic so much. Let's say this isn't clicking for you. Like you look at other capacities or other things that you do, like tithing. Some of you might tithe.
and because it's important to you, you realize once that money gets taken off the top, you always have enough money. Or if education was important to you, you know you've been saving since your daughter was born, you always have enough money because it came out off the top.
Right.
And it's amazing how the behavioral aspect is that I call it sequestering. When money disappears off the top, I don't know where it is. And Barb, who's amazing, she's our CFO. She sequesters money all the time. I'm like, where? And she's like, I'm only letting you see the operating account. I'm like, oh, that's awesome. You know what I mean? And the whole point is you want to automate your future. Dentistry's hard enough. You got to focus on your patients. You got to focus. But Profit First only takes 5 minutes a week. You're basically going to sit down and go, what did we collect this week? Transfer. Now I'm going to go golf. Do you know what I mean? Whatever it is, you don't have to sit and go through your overhead. Somebody else can figure out your bookkeeping expenses, and that only has to be done once a month by somebody else. And Drew, you do that for people, but I can't let you go until we ask a couple more. Now, charitable giving. Where does charitable giving fit in the Profit First model?
Yeah, so great question. So, and I have a lot of dentists that that do tithe, right? Or they do a substantial amount of charitable giving, and it doesn't change, from where you had your paycheck coming home naturally. And so you pull money out of your out of your owner's pay, or every single quarter we do a quarterly profit distribution. We just have to take that into account. If we're going to take our 10% of whatever we're taking out, that's going to be our our tithe for that quarter, or our tithe for that 2-week period, or for that weekly period. Whatever it may be.
Yeah. So just to review, guys, the whole idea behind Profit First, and Drew, you're going to let us know how we can get a copy of this book. I want you to talk about for dentists, because you're writing that right now, is that you're going to take the money off top. It's going to go to Profit First. Then you're going to pay yourself. Then you have taxes, and everything else falls to the expense account. We're going to go through overhead at another call. And then also, if I'm a dentist, it's like, Drew, this is too hard. Like, I have a hard enough time. You give us some thought process on this, because you do this for dentists. You actually do it for several of our clients. You just handle it all.
We do.
And they can just do dentistry. So talk about that.
We do. And the premise behind that is spend your time where it's most valuable. And so most dentists would believe that their time is most valuable in the chair, right? Or out with their family doing something, whatever that may be. And so if they can get 3 to 4 or 5 hours a month stripped out of their day or stripped out of their month of things that they maybe don't particularly even like doing, but has to be done, and let somebody who's an expert do it, we've built a process and a model in order to deliver exactly that.
Yeah. And so, Drew, I know people are going to want your help. So, and keep in mind, some people are listening to this on iTunes. How can I find you? How do I get to you? How can you help me? Yeah. Where do I go?
Absolutely. So if you want to know more about Profit First specifically, you can go. We have a website. hpadvisors.com is our organization's website. Right on there, there's a webinar that you can watch. It's called Become a Profit Maximizer. And so you click right there. You sign up for it. We run it a few times a week in order to make sure that we can answer some more details of the nitty gritty, if you will. You can chat right through directly through our website as well. So it makes it super easy. You're between patients. You have 10 minutes or 3 minutes or 2 minutes or whatever it may be. You just want somebody to be able to reach out to you to set up a time for a consultation on your administrative day, or maybe even an evening or a weekend if that works for you, then we can get that taken care of as well. So I would say our website is probably best. You can look me up on LinkedIn or on Facebook, or email me directly at drew@hpadvisors.com.
Yeah, guys, don't even think about it. Just do Profit First. I'm telling you, it works. It's the way to go. It's the only way to go in the future of dentistry, given all that's going on. So, Drew, I am telling you,
it changes lives. So it's a good
lives.
thing. It does.
And you told this to me a long time ago. You said it's probably one of the most important things you did in your own business.
Correct. 100% agree with that. And I'm telling you what, I've never had my stomach lining has never been as thick.
That's awesome, buddy. Well, again, I'm so grateful. We're going to have you back for so many other things. And so stick around while we say goodbye to everybody else. But thank you guys for watching the Best Practice Show. If you enjoyed today, which I know you did, just do us a favor. Just hit the share button, share it with your friends. If you have questions, reach out to Drew. I also want to encourage you to send us questions that we can ask Drew on topics. I know people want to know about the overhead thing, all the other things, and how to buy a practice, accounting considerations long-term, even like long-term financial planning. We're going to have Drew back, and he's going to give us a simple treatment plan every single time. So keep sending us that. And I guess until we see you next time, keep watching the Best Practices Show. You guys enjoy this weekend.